Good afternoon and good morning to those of you dialing in from Europe. Welcome to Asia Crypto Alliance first webinar series for 2023. My name is Su Yen and I am the co-founder and CEO of Asia Crypto Alliance. Welcome. ACA is a trade association advocating a fit-for-purpose regulatory and policy architecture for the Asian crypto and digital industry. Of late, as all of you are aware, news related to the crypto economy is less than ideal, but nonetheless, interest related to digital assets and crypto isn't in deep freeze. It's merely just going through winter. As such, areas such as tokenization continues to march ahead. In collaboration with Baker Mckenzie, Fusang, and Kubix, we in Asia Crypto Alliance would like to share our thoughts about what we are seeing in the Asian tokenization space and how it is developing. We will start with an overview of the state of affairs for tokens in Asia, and our speakers will delve into certain Asian markets. After this, a panel discussion among our participants will hopefully engender an interactive session with all of you in the audience. Our speakers welcome your questions, and we would encourage you to use the chat function to pose your questions. So without further ado, let me briefly introduce our speakers. We have on our panel, Kuna Pina, Managing Director of Kubix, who is responsible for Kasikorn Bank's digital asset platform. Kubix recently announced the success of his Destiny token that raised funds for the production of Love Destiny, the movie. The token sale was closed on June 2020, and in less than a year, Destiny token was able to make an early redemption and paid capital in full with returns to token investors by 1st March 2023. We have Henry Chong, who's the CEO of Fusang, and is Asia's first fully licensed regulated ecosystem for security tokens and digital assets for the private and public markets. Fusang is fully licensed in Hong Kong and Labuan, Malaysia. We also have Kun Kularat, who's a partner of Baker Mckenzie. Kun Kularat is a highly respected legal professional in the fintech and digital asset space, both domestically and internationally. She is a partner at Baker Mckenzie Thailand and leads the fintech team there. Last but not least, my partner, Vivian Khoo, who is the co-founder and chairman of Asia Crypto Alliance. Vivian was the chief operating officer and interim CEO for BitMEX. Prior to BitMEX, Vivian spent nearly 2 decades in Goldman Sachs, where she was a managing director overseeing Asia compliance ex-Japan. She was also an ex-regulator at the Hong Kong SFC in the corporate finance division. With that, I would like to hand the floor over to Vivian. Thank you, Vivian. The floor is yours.
Okay, thank you, Su Yen, for the kind introduction. And I think just for the purpose of audience who are calling in, I think how we're going to run this session is I would provide a just very brief overview about tokenization. I think more focus on Hong Kong, but also touch on maybe some of the Asia jurisdiction. And then we'll have Kun Kularat and then also with Henry covering more specifically on the Thai market, and then Henry on Malaysia and also, his perspective on Hong Kong too. And then we will then open it up, to panel discussion after that. So maybe just why don't I start to a broad industry overview. Actually tokenization has been a topic of discussion for many years, going back to the ICO days, 2017-18, where there has been, a series of ICO. Many of them did not survive the last cycle. So fast forward, looking at maybe 18-24 months back, I think there was a wave of people focusing on securitized tokens, and then last sort of 12-16 months, the wave of NFT. And we see actually, emerging trends in terms of tokenization from an institutional context. And when you saw actually a lot of the coins or tokens, which used to be launched on private blockchain, we are seeing more of a trend that is launching on public blockchain, which shows a sign of maturity. And I think larger institutions and companies having more confidence in terms of structure and then interoperability of these platforms. And on the payment side, some of you might also have seen the news about, some are still progressing pretty, progressively on the payment space, but Visa, MasterCard, for example, are actually putting a break in terms of how they are integrating crypto. I mean, for various different reasons. And just going across the different jurisdiction, Japan, if some of you have dealt with Japan, probably realize they are one of the first jurisdiction which had a virtual asset framework. They have a licensing regime, and then there were a number of license applicants who apply. And, they actually have switched a couple of years back actually to turn it to be a bit more conservative. But lately, they have had some relaxation in terms of the coin offering or token offering on current listing on existing platform. They have streamlined some of their approaches. Whereas Korea, for example, actually we heard this month that they are planning to introduce the security tokens regulation locally. So, we're waiting to see what's going on with that. And then closer to home, Hong Kong, a lot of excitement, ever since FinTech Week, November. So the government actually did a pretty big announcement that they're going to support Hong Kong, less so focused on crypto specifically, but just as part of the broader FinTech plan in terms of how they want to brand Hong Kong as a digital hub. So, more recently, Paul Chan in Hong Kong made an announcement on the investment that will go in to back our Web3 investment. So they will, I think the numbers they are throwing out is about $6 million US in the annual budget. And also July last year, there was a committee that was set up by the ITB called the Digital Economy Committee, which comprised of academia, regulators, and practitioners, which the government will be working with to just look at what would be helpful to facilitate, I think, the different stream, infrastructure, policy, governance-wise to make this happen. And then I won't actually go into the 361 pages of consultation which got released, but maybe some brief highlights because it's very relevant in terms of what we're talking about today on tokenization. Specifically, the sort of big headline really is, Hong Kong has aspiration now to create some sort of infrastructure for retail to participate. But what that would mean is there will be a set of guidelines that actually, if you want to offer tokens, that you will have to abide by, but there will be additional guidelines if you want to offer to retail. So I think nothing surprises us, which has to deal with suitability assessment. There needs to be very specific governance, token due diligence, and also token emission criteria. So this is for non-securitized tokens. They are not doing this, offer this for retail for securitized token. So there are some proposal about, tokens that will meet a certain market cap. You need to reference, indices, and then also a lot of disclosure and, marketing process and, imposing some threshold and criteria if the platform were to let retail participate in this. So I think that's a lot of details there, but I think all in all, it's just a good indication that Hong Kong wants to actually create some sort of framework, for retail to participate. Although, there's been news that there are a lot of firms applying on the markets for the VATP license. So, it is a question of how many we think that will come through. And also with this kind of listing criteria, which is fairly onerous, how many tokens can they, realistically really be approved in the initial stage. But maybe I'll stop there, just to sort of leave a bit more time later for Q&A, also of panel discussion. So I want to pass it now over to Kularat, who would cover, I think, things from a Thai perspective. So let me pass it to you, Kularat.
Sure, thank you very much.
Thank you.
Khun Pimlapat, can you help share the slide, please? Okay, so in Thailand, as many people may know that we have a specific law called Emergency Decree on Digital Asset Businesses. And this law sets out the rules for offering digital tokens and the licensing and compliance requirements for operating digital asset businesses in Thailand or for Thailand-based customers. So basically, tokenization in various forms has been legally recognized in Thailand since 2018, thanks to this law. Under this law, digital assets include cryptocurrencies and digital tokens. And digital tokens are further categorized into investment tokens and utility tokens. Investment tokens basically give you right to participate in an investment in any project or business of the issuer, while utility tokens give you the right to get specific goods, services, or other rights as agreed between the issuer and the holders. And to offer investment tokens or utility tokens that are not yet ready to use, you need to comply with offering requirements. That means you need to do the filing of the draft prospectus and offering documents. You need to get approval from the SEC, and you need to offer the token through an approved ICO portal. And I think although digital token offerings are usually referred to as ICOs in Thailand still, but the regulated ICOs are actually more similar to STO in most countries. To give you some examples of the different types of tokens, the first one is investment tokens, and it's called Sirit Hub token, which was Thailand's first regulated ICO back in 2021. And it allowed investors to gain yields from a long-term lease agreement that is generated from a group of office buildings. And this investment token project worth approximately 2.4 billion baht was approved by the SEC for public offering with a financial trustee and also secondary market listing on a digital asset exchange. So it was one of the world's first real estate-backed investment tokens back in the day. The second project that I want to talk about is Destiny Token. I think Kunapinya can talk more about that because Kubix is the responsible ICO portal for that project. But just briefly, it was the first regulated hybrid ICO in Thailand with the features of both investment tokens that I talked about and with features also with some utility tokens. So holders can, will receive yields at different tiers depending on the success of the movie called Love Destiny, which is a movie by a leading production house. And they can also enjoy movie-related utilities such as tickets and merchandise. So this project has really paved the way for new methods of film financing. There have also been several ready-to-use utility tokens that have been issued in the past without complying with offering requirements. Sometimes we call it non-regulated ICOs, mostly in the retail and entertainment industries. You will see that from this page, there are other digital assets that you may have heard of. What is the categorization under Thai law? When we talk about NFTs, for example, NFTs that represent ownership of purely digital files or digital content in the metadata, such as digital art, profile pics, and video shots, for example. These types of NFTs are generally not regulated as digital assets in Thailand, meaning that the offering and the trading, marketplace, everything around non-regulated NFTs can be done without complying with the digital asset law. However, if the NFTs will also provide the right to participate in investment or to receive specific goods or services as well, then those in NFTs will be regulated as investment or utility tokens as well. The other types of digital assets like stablecoins are considered cryptocurrencies under Thai digital asset law, and it can be used as a trading pair. However, issuance or offering of stablecoins in Thailand may also have some legal considerations under currency law, which is supervised by the Bank of Thailand. E-money is a complete new and different a species. It's actually a stored value facility that is used for payments, regulated under the Payment System Act and supervised by the BOT, so not to be confused with utility tokens. And the BOT itself has also launched some CBD projects in several phases, and these CBDC will be exempted from complying with the digital asset law and is under the supervision of the Ministry of Finance and the Bank of Thailand. Next slide, please. So for the upcoming changes regarding utility tokens in particular, based on the latest hearing by the SEC, this will be what will be the utility tokens regulatory framework will be in the near future. So if you look at it, you will see that for ready-to-use utility tokens, they will further categorize into two groups. The first group is the consumption tokens, whereby the tokens are purely used for consumption purpose, similar to like vouchers, coupons, or something like that, that the purpose of getting the tokens is to get the goods and services behind the token. Another type is like certificate type of token, and the SEC give some examples of like beads or REC, which is renewable energy certificates, as well as carbon credits as examples. And this group cannot be financial products, right? And if anyone is going to issue group 1 ready-to-use utility token, the issuer will be exempted from offering requirements that I mentioned earlier. And for any secondary market activities, it will also not be considered as a digital asset business. So it can be done by a non-licensed entity, like marketplace that facilitate the tradings, for example. On the contrary, the licensed entities like licensed exchanges would not be able to make available those tokens on their platforms because those tokens are not considered as digital asset, right? And then we have group 2. Group 2 is any other utility tokens apart from group 1. So anything else falls under group 2. And the SEC has given some examples like the native tokens, governance tokens, or tokens in DeFi, CeFi, GameFi projects, as well as exchange tokens as examples in the hearing. Whether or not to comply with offering requirements, the issuer would need to think about whether or not they would want to list the tokens that they issue on a licensed exchange in Thailand. So if they're going to list it on an exchange outside Thailand, that's totally fine. But if they want to list it on an exchange in Thailand, then they would need to comply with the offering requirements that I mentioned earlier. If they're not going to list it at all, or they're not going to list it on an exchange in Thailand, then they will be exempted, right? And then the secondary market activities regarding group 2, it would require a digital asset business license. And that means, for example, licensed exchanges can list those type of tokens on their platform as long as it complies with the regulations and their own. Kun Pimlapat, can you please go back to the previous slide? So the exchange will need to think about the regulations as well as their own listing rules, right? Now we have on the right-hand side, not ready to use utility tokens. What does that mean? It means if the issuer issues the tokens for the purpose of fundraising and use that raised fund to actually acquire or prepare for the underlying goods and services to be redeemed later, then that's not ready. That is called not ready to use utility tokens. And either it's group 1 or group 2, if it's not ready to use, the issuer will always have to comply with the offering requirement, right? And in terms of the secondary market activities, they will look at whether it's group 1 or group 2, and the implication is the same as the ready-to-use utility tokens. Some notes to make is that there's some additional requirements that all of the tokens that we've talked about that are considered as utility tokens must not be considered as means of payment or MOP, something similar to like e-money. And there are some details as to what the SEC and the BOT means by MOP. Next slide, please. Okay, so I think 3 developments recently that I see that is worth mentioning for this webinar is that the first one that I want to mention is very recently. It was just yesterday. We got tax relaxation. The cabinet has approved the draft royal decree, which would exempt several things. The first, it would exempt corporate income tax for the issuers, meaning that it will not treat the investment proceeds from the fundraising activity of issuing investment tokens. It will not treat that as income. Secondly, it would also exempt VAT for the issuers, meaning that it will not treat the token offering as a sale of assets that would trigger VAT liability. And this is specifically for investment tokens. Thirdly, it would also exempt VAT for token holders who on-sell the tokens to other people, whether on or off exchange. So it's a very good relaxation that everyone in the market has been expecting and hoping for. And now I think in a few months, it will become effective. Second point is that I personally think that there will be more enhancement of investor protection, and I see that for tokenization as a good thing. So I see tokenization as a hybrid tool combining traditional finance and digital asset. So for regulatory framework that will support tokenization to thrive, I think there needs to be consideration similar to traditional finance, like compared to securitization, and especially the need to enhance investor protection. So the SEC also mentioned in one of its latest hearings about debt-like ICO, which they said that there would need to be some disclosure of credibility assessment of the projects by the ICO portal or independent experts so that the investors can better assess the credit risk and the ability to repay the debt in comparison with the promised return. And also they mentioned about infra-backed ICO, which is ICO with infrastructure business or infrastructure assets as underlying assets. And the SEC will enhance the regulations around infra-backed ICO by adapting the requirements currently applicable to infrastructure trust, but only to the point that it is, can be appropriately applicable to infra-backed ICO. So based on the draft concept, it seems to give more flexibility when compared to infrastructure trust. So it's quite clear that the policy is to keep allowing this ICO, which is like project-specific financing tool, or sometimes can be considered as like alternative financing tool with better efficiency and creativity in the Thai market. Last but not least, the creation of digital capital market infrastructure. Also last month, the cabinet has approved in principle the amendment to the securities laws and as well as other laws to fully enable digital securities and also to transform investment tokens to be regulated under securities law in the future. So that's basically the overview of the Thai regulatory framework and the recent developments.
Okay, great. Thank you very much, Kun Kolarat. And then Henry, can I pass it on to you?
Hello, good afternoon, good morning, everybody, wherever in the world you are. I'm Henry Chong, CEO of Fusang, and I'm going to try in the next 15 minutes to gallivant a little bit, talking about what I see as security token market developments broadly around the world. And Vivian's also asked me to talk a little bit about recent developments in Hong Kong and Malaysia, two of the jurisdictions in which Fusang operates. Let me share my screen. Fantastic. Fusang has always been focused on this idea of what I call asset tokenization. There's a lot of interest in the last few years around cryptocurrencies, and I personally see the idea of using the same underlying blockchain technology that powers assets like Bitcoin to represent real-world assets like shares, bonds, and funds as really the future of finance. And that's what Fusang as an institution has been set up to do, to say, how do we actually build the core infrastructure that enables us to start tokenizing real-world assets? And what are the key barriers to adoption that we see today to get existing issuers who want to use tokenization to create assets? And just as importantly, how do we get banks and brokers and all the traditional financial institutions that power today's capital markets to come and actually be willing to buy these security tokens? And it's not just me. Larry Fink recently gave an interview at Bloomberg where he said tokenization, asset tokenization is the future. And actually just like to play this 30-second clip for everybody.
I actually believe This technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
And that's really the dream, right? Can we take all of these assets that we have today, have them live on the blockchain and have them interoperate the way that we're used to with crypto assets like Bitcoin? And the reason why Larry Fink and everyone else, I think, is getting very excited about asset tokenization are some of the points that I've listed here. The idea that once I can represent things as a token, I can start to build liquidity markets in a different way. I can start to allow fractional ownership, differential access. The idea of people being able to buy, for example, into a fund, but with smaller ticket sizes. And then once I've owned that token, the ability to transfer it to anybody else, to be able to settle this across brokers, across banks, and to do so all within a governance and regulatory framework. Unfortunately, there's still a lot of barriers, still some issues to why the markets haven't always transacted in the way that we're hoping. Nevertheless, a lot of big banks, corporates, even central banks like the Hong Kong Monetary Authority have plowed ahead to do issuances. A lot of them have started with bonds for a variety of reasons, but really to say, hey, what if we take an underlying product that in many ways seems kind of boring and tokenize it on the blockchain? Wouldn't that be interesting? And again, more and more banks are queuing up to do this. But interestingly, when you look at these tokenized bonds, you look at the size in which they're issued, and you look at the way in which they are traded in secondary markets, it's actually still worse than if you had the traditional paper form, because I think a lot of market infrastructure is still missing today. The Hong Kong tokenized green bond is a great example of this. They did it in some degree of size, about $100 million. They got a bunch of banks, including Goldman Sachs, Fidelity, etc., to come and buy into this issuance, but it can't quite yet fulfill that dream that Larry Fink talked about being able to distribute these tokens directly to end individuals, where we can start to do things like settlement directly on the blockchain. And the key to me is trying to unpick, well, we've got the tech ready. Tokenization's been around a while. We've got the assets ready. The world's got no shortage of people looking to raise funds. And we've got financial institutions who say they want to come and buy these security tokens. What exactly is missing? And my belief is that right now, the problem is that we started off with cryptocurrencies that could be transferred around anywhere in the world quite flexibly. But when we moved to security tokens, we said, well, we need to follow some rules. We need to layer compliance on top of these tokens. And more specifically, if you have a security, you need to be able to register it in the name of an individual, because the world of bearer assets is long gone. How do I do that? Well, everybody started to look at what I call a centralized solution, to say, I as a platform will come and onboard you, the client. Once I have your ID, I can then link this to the token in question. The problem is that's not quite how existing financial market infrastructure works. If I'm a broker today trading on a stock exchange like NASDAQ, I expect to be able to route my trade to that exchange on behalf of my clients without needing to pre-onboard every single one of my clients, get them on some kind of whitelist. I say, hey, I'm a regulated FI. I want to be able to come, plug in, trade directly. And so brokers that we see today, they're all hungry for new products. They're very keen on all kinds of digital assets. But unfortunately, the way in which digital assets are transacted just doesn't quite fit into the existing operational infrastructure. Fusang has an idea of how this can work. I think other people will have different designs of how they see solving for some of these problems. But to me, that really is the key, the next wave of asset tokenization. How do we allow traditional financial institutions, the banks that already have their existing customers, existing clients, existing flow, and allow them to easily plug in to this market? And my belief is the missing infrastructure that I mentioned is the ability to now take these security tokens and start to transfer them between platforms. To say, if I have a token with one broker or one exchange, I want to be able to move it to a different exchange so that I can trade it over there and start to actually use the blockchain for what it was designed for, a way to start doing trustless settlement, and in time to come, a way that we can start to actually explore some of these novel DeFi concepts, but centered around real assets and centered around a network of regulated counterparties where that financial set of players in many ways mirrors what we see in traditional capital markets today. And Fusang has a whole design for how to make this work, but that's not the topic of today's talk. But you can email me or something. I'm sure someone can stick something to the chat if you're curious to know how we see all of this developing. But maybe just to talk a little bit about country approaches, because I think this also relates back to the point I was just making about how to get market infrastructure to look like what traditional financial institutions are used to. And I'll come back and explain why the different approaches between some countries are also a barrier to institutional adoption of security tokens, as long as we're missing this kind of fundamental settlement infrastructure. Malaysia, a country in which we operate, a country in which the Fusang exchange is licensed as a stock exchange, they were in many ways very early on to the party, where right as crypto assets were taking off, the Securities Commission, the financial regulator in Malaysia, came out to say, all tokens are securities. Now you can debate whether that was a good idea or not, but what it allowed them to do was elegantly bring these novel assets within existing regulatory frameworks around things like offerings, but also around who can participate in, for example, helping an issuer distribute a transaction, who can trade these assets, etc. The Malaysia Central Bank back in Negara has likewise said, well, okay, crypto assets like Bitcoin are a bit novel, but I'm in charge of all currency reporting. I require that all licensed institutions report to me whenever there are any cross-border currency flows. I'll include crypto reporting in that as well. So all financial institutions in Malaysia who deal in crypto assets every month need to submit reporting to the central bank, just like how you would on any fiat currency transactions. And Malaysia has also introduced onshore licensing for crypto-specific exchanges and have done so for a number of firms. In Labuan, jurisdiction near and dear to my heart, where Fusang is licensed, Labuan is effectively a special economic zone of Malaysia set up precisely to act as a hub for cross-border flows in and out of Malaysia. Labuan has adopted, in my opinion, the correct approach of saying, if you have the same business, that business should be regulated in the same way. And they, I think, had a very forward-thinking approach to say, if you are undertaking an existing regulatory activity, let's say you're acting like a broker, I don't really care what you're acting as a broker for, whether that's securities or digital assets, why not bring you within my existing licensing framework? And they've gone and done that for a whole slew of license categories, ranging from brokerage, fund management, banking, exchanges, insurance, etc., to say, if you want to undertake novel digital activities, you need to come under our existing regulatory framework. And I actually think that's a large reason why they've been so successful. I think they now have something like 90 digital specific players that have come in under this new framework. To contrast that, Hong Kong. Hong Kong was in many ways the hub of cryptocurrencies during what I call the first ICO boom in 2017. For those of you who've been poking around the crypto industry a little longer, will know that most of the exchanges that you hear about today, the brand names like Binance and BitMEX and FTX and all the rest of them, were at one point effectively headquartered in Hong Kong. Hong Kong, a couple of years ago, decided that they were less enthusiastic about cryptocurrencies and really was not something they were ready to explore yet. And that resulted in a whole outflux of both people and businesses going from Hong Kong to various other jurisdictions around the world, including places like Singapore. I think Hong Kong wisely today recognizes that that was a missed opportunity and that, like it or not, digital assets of all forms are here to stay. And they've recently, as Vivian mentioned, put out a massive consultation paper, 360 pages, for those of you who've read it, looking at how do we bring the exchange of virtual assets, what they call cryptocurrencies like Bitcoin, into a licensing framework which could sit under the SFC, right, the Hong Kong Securities Regulator. To go with that, HKMA, the central bank, has said that they intend to regulate stablecoins probably by next year. And really, I think the Hong Kong approach is to say, well, if you're going to run a financial institution or platform, we want you to comply with all the same guidelines that all the other financial institutions need to comply with. So when it comes to things like AML or how they introduce, they call the responsible officer scheme, we expect that to look the same as traditional FIs. And what I am very optimistic about is that they will then say, well, if we decide that the licensing regime should in many ways mirror traditional, we need to think about the asset layer in the same way. So if you are doing an offering, there are certain rules around how offerings can be done to the public, to retail investors, how offerings can be done to private investors, and that they will go ahead and apply a similar framework. Again, this is all kind of in consultation and in progress, but I'm personally very optimistic that Hong Kong has woken up to say, this is the future. How do we come and participate? And I think, as I mentioned earlier, the central bank, HKMA, issuing a tokenized green bond is a great sign to the industry. Because when you have a central bank going off and issuing a tokenized bond, it then immediately removes all the reputational risk you might have of a private bank saying, okay, I'll go issue a bond as well. And if anything, probably the other way around. I'm sure there are conversations going on in boardrooms all over various banks saying, oh, if the central bank has done this, it means that we can definitely do it too. But how do we do it? What exactly is our digital asset strategy? And how do we go about bringing that world that Larry Fink talks of, where we can start taking all kinds of traditional assets and bringing them on the blockchain? But I'm conscious of time, and maybe just to wrap up, I actually think that the jurisdictional arbitrage that in many ways you see existing in the world today, where people are trying to hunt for jurisdictions in order to get around regulation, is not long for this world. And I think that more and more regulators are going to say, well, this asset class is here to stay. And if it is going to become a big thing, we need to bring it within existing regulatory frameworks, not least of which will be things like FATF's travel rule in terms of how identity gets exchanged between financial institutions, and how do we start to comply with things like tax reporting frameworks, like the global CRS Common Reporting Standard. And I think that that's the deal that all of us in the digital asset industry need to accept. If we believe that this is all going to become mainstream, the way I think we are all fighting for, we need to recognize that mainstream rules will come. And the question then becomes, to me, not how you go off and kill the banks, as some people in crypto like to say, but how do you go and take, as I said, all of those existing clients, flows, and institutions and bring them into what I see as a new technology layer, letting us create, trade, transfer, and settle assets in a global way for the first time. Anyway, I think we're going to have a panel discussion in a little bit. Happy to chat endlessly more about all of these topics. I'll post the email as well in the chat, and if people have more questions or comments, feel free to reach out to me.
Okay, Suyen, do you want to do a quick wrap on this, or do we move to the panel?
Hi, I think we should, in the sake of time, let's move straight to the panel so that it gives you all a bit more time to talk on the subject matter and give question and answer time. Thank you.
Okay, so why don't we move on? So We've prepared a couple of questions that we're going to do sort of panel sessions on, because we clearly don't just want to all talk about the rosy side of things. So the first question is going to be, in light of all the volatility and the collapse of FTX with some correction in the market. This question is posed to, I think, all the panelists who are interested in answering, but with the recent collapse of FTX, and there was a big discussion around FTT use of token. So do you think actually with that sort of headlines and overlay, that will continue to accelerate actually the crypto adoption in traditional finance? And I think we talked a bit about this, well, a lot about this actually before, about I think different perspective and conviction about that would be the case. But I mean, any of the panelists actually interested to take that question?
Well, I'm always happy to talk endlessly about controversy. I actually think in years to come, we'll look back on FTX as a great moment for the crypto industry. It's not ideal the way in which it happened and all went down, and obviously millions of people and billions of dollars were affected. But the truth is the crypto industry has been plagued by a reputation problem for some time. It's unfortunately garnered a reputation of being a kind of Wild West corner of finance, a land in which people are there to pump and dump and buy into speculative assets and meme coins. And to be fair, there are platforms who helped come and satisfy that demand, but sometimes weren't always operating in the way you might expect a regulated financial institution to operate. And I think that in the wake of FTX, it will force the entire industry to rapidly grow up and say, look, we need to put our customers first. We need to start operating like the financial institutions we claim to be. And we need to start thinking very carefully about when we create tokens, what do they actually represent? So for starters, if I say I've got a stable coin, is it really? What is it backed by exactly? What is the legal link and claim that I have as a token holder over any underlying assets? And certainly, I think this is going to drive the market very rapidly towards looking at asset tokenization to say, why don't we just use tokenization to wrap the same assets that we are all used to buying and investing into every day? And I think you've actually seen a wave of traditional financial institutions and banks coming into the market as a result of FTX, where before they felt like, well, this market's a bit wild and not for me to participate in. And now banks say, oh, I actually think there is room for me to participate, to be that trusted player, to use my brands and my license and my balance sheets and carve out a space in the digital asset world.
I think that's a great, great response. I see a question in there, but I think we will try to probably address the questions at the end. So maybe in the interest of time, I move on to the next one, which is in the last 12 to 18 months, we see regulators continue issuing new guidance on dealing and classifying different types of tokens. This is not only for Asia. We see it in the US, we see it in Europe. I think broadly sort of bucket into securitized, non-securitized. Do you, any of the panelists want to actually give any comment or feedback of, is this a welcoming, sort of action, or are there any challenges you face? I think this will be more so for the operators, so maybe, maybe Kubix, and Henry. I think maybe we'll start with Kubix, since none of you actually, you haven't had a chance to provide any feedback.
Okay, sure. Thank you very much for having me, and I'm representing Kubix from Thailand. We are the ICO portal. Basically, we are supporting the issuer to launch tokens in the regulated space in Thailand. And on the other hand, we are also responsible for offering the tokens to our investor as well. So given that the question about the regulation change in Thailand that Gulalat has already outlined for you, from our perspective, we think if you look back, right, in Thailand, we started regulation with something that treat digital asset as a separate animal from the securities. So we start from put a different regulation around it and bundle everything, whether you are proposed of investment token, utility tokens, or cryptocurrency under the same regulations, and the perception of the market would look at everything as the similar animals. And during that time, the cryptocurrency have a rise and fall, and people will think everything are the same. So when we talk about digital asset, or even we try to differentiate the investment token, people still perceive they are the same type of animal, because they categorize under the same in the law. So that actually is a positive and negative to us who are focusing on the digital token or the investment tokens. On the plus side, people are excited about the whole industry, so they start looking into it. But on the downside, with the different risk return profile, we got the digital token be expected to have a 10x or 100x return, and vice versa on the volatility as well. Which, when we talk about digital token or investment token, is actually more like tokenized asset. That have the substance, and some of the assets do have the cash flow that you can have more like a traditional way to value it. So the risk return profile has been distorted because it's grouped under the same thing. So with the change of the regulations, with trying to clearly define and look at the substance of each tokens and try to see which one is the more like a tokenized asset, which one is more like a crypto mean of exchange, etc. This will help the industry to put more effort to look at the substance, and the investor as well as the issuer will have a clear view on what they are trying to do. If they try to do fundraising, then they can use the investment token as a mean to raise fund, and we can position this kind of investment token for fundraising as an investment instrument that quite similar to securitized asset or other traditional finance, and people can put them into a portfolio with a different perspective. So I think with more clearer definition of different type of tokens, it will help the industry to be able to put the risk return of the different tokens correctly. So I think that's definitely a positive side. Having said that, on the challenge, we do see that now because when we talk about digital asset, it does touch on many traditional finance world, as we already touched, right? We touched about the stable coins, which is more like the currency. We touch about the asset, which is more like securitization. We touch on mean of payments and all those stuff. So it is quite hard to really put the right definition, and the more we try to define them, the harder to classify them. So when we talk to our issuer on what they're trying to do, the first thing as ICO portal, we have to help them to analyze what they're trying to do is fall under which type of definitions. And with that definition, it will lead to a different treatment and the regulation framework, especially in Thailand. So I think that will be a challenge because one thing, once everything is on blockchain, our client or issuer try to leverage all the connectivity of the blockchain, whether it's an investment token, utility token, or we prefer if we can actually settle some of those transactions with the stable point. So we try to link them together to enjoy the best benefit of blockchain. But one is being segmented into different buckets and is treated separately. Then those connectivity might lost along the way. So I think that's where we are. But I think the interest from regulator and the industry is always positive, because we're moving forward. We try to fix some of the problem. We might create a new problem, but at least we are moving forward on this industry. So that's our view.
No, I think that's very great feedback, because I'm sure when the regulators put out the rules, they could not really comprehend, like, putting it out this way would have this impact. So I think that's why I think market engagement is very important. I know like in Thailand, you have industry association too. So, doing interfacing, and we sort of do the same with ACA. So great. Okay, so maybe I'll move on to the next question about securitization and tokenization of real world assets. It's certainly a key area for the wealth management community. It's, to be honest, actually, there are a lot of different communities, asset management too, and different sector, which is very interested because that allows them additional products or investments that they can market to their clients. So are there any specific sectors of industries that you think actually will benefit from the recent changes? And I know that's kind of a broad question, but I think wherever you are, whatever jurisdiction you want to comment on, welcome any feedback on that.
Sure. Thank you, Vivian. So I'll probably talk from Thailand perspective. I think what our current laws and regulations offer, actually any industry can benefit from the recent changes in the Thai regulatory frameworks for tokenization. But for the specific industries that I foresee that will be able to use this opportunity to create like a huge impact are, for example, the first one is the real estate backed and infra-backed tokens. This is because under the SEC regulations, we now have like specific regulations that allow real estate backed tokens, which basically give more flexibility than traditional REITs, but at the same time provide sufficient protections to investors so they could still be attractive to investors as well. And the SEC will apply the same concept to the infra-backed ICO that I mentioned earlier. So this will help provide like alternative financing for private infrastructure projects, which are usually needed in countries, including like in Thailand. And on the flip side, that is a good alternative investment for the investors as well. And overall, it could help for the promotion of the infrastructure-backed ICO. It would help enhance the development of the overall infrastructure projects in Thailand. So that's one industry that I foresee, and I think it could have leverage on the current regulations in Thailand. The second one is the ESG industry. In the hearing that I've mentioned earlier, the SEC would allow the issuance and the trading of certificate tokens, and they give very clear examples of something like carbon credits and REC, renewable energy certificates, and these, like the issuance of offering of these types of tokens, would be exempted from offering requirements, and the activities in the secondary market, like tradings or acting as a marketplace, will also be exempted from licensing requirements. So all in all, I think this could help create more incentives for the businesses to be more environmental friendly, especially those who can have the possession of the REC and carbon credits or similar. And at the same time, it would also create awareness in the public, because the offering of the tokens would be like to the public, and it creates this awareness in the public, especially of the importance of the green economy. Another aspect of the ESG is we see the rise and expansion of electric vehicle, EV, and the infrastructure around it, like for example, the charging stations. And definitely when you change from some technology to another, it would need a lot of financing for the infrastructure to be built. And the industry can actually use the investment tokens and utility tokens to be a part of their alternative financing, and also to help support the overall business. Last but not least, another industry that I am personally passionate about, especially for Thailand, is agriculture. So if we think about agriculture, if we can allow the agriculture sector to be able to use tokenization as the way to do alternative financing, especially if possible to replace any unfair practices from contract farming, and also to use the money to create more value to the agriculture products or support the agri-tech industry or overall. I think that would be something that we would want to see. Tokens also could allow like creativity in the not just the financing but the overall structure of the business model. So if you give let's give an example. Like when you think about Thailand, the first fruit that you think about is like durians, right? It's very famous. We're very famous for durians.
Are you going to have durian tokens?
Yeah, maybe it's possible. Think about it. So for the farmers, they need financing. So instead of doing contract farming or get normal traditional financing, they can actually issue investment tokens to use the investment proceeds to actually do their farmings, which is normally quite seasonal. And at the same time, they can also create utility tokens that could, if used with creativity, could create marketing. It's a marketing tool. It could create demand and markets both domestically and for export as well. So I think that's just one example. But for a country like Thailand, it is also an industry that I would personally really love to see, using this channel to do a lot more in the industry.
Great. Anyone else? Any other panelists have any feedback on that question? Okay.
Well, I think I agree with what everyone is saying. To me, there's obviously a lot of interest in the tokenization of new assets that haven't previously been investable. Things like funds, alternative assets are obviously very interesting. But I actually think there's a lot to be said from just giving people greater access to the boring assets we already see, like bonds. In many ways, bond markets are highly institutional. Most of them are not traded in the way that we think of like public equities. It's all very OTC. And the ability of an individual, a retail investor in most countries to access those bond markets are more limited than trading the same equity of the companies that issue them, even though ironically, bonds should in theory be lower risk. And I'll give you a very concrete example. If you go to whichever bank you use today and you ask them what your fixed deposit rate is for 1 year, I can almost guarantee you that that rate is going to be lower than what that bank pays for their own corporate bonds. For institutions to effectively lend money to that bank in the exact same way for the same period of time. And the reason why that yield spread exists is just because individuals can't get access. And I think there's a lot to be said for just the tokenization of boring assets as well.
Yeah, if another things I may add is that because the regulation in Thailand actually allowed the big corporate, right? They can pick particular project to tokenize. So this is add to Henry's point that you can bring only the interesting part of your project to tokenize. So you can create quite interesting project for investor to join in. Like when we did the Disney tokens, which is the financing for the movie, the company themselves is not a listed company. So actually in Thailand before, if you're a normal investor and you like the movie or you like this industry, there's not many instruments for investor to access or chip in that interest into supporting those company or even the project that they like. So with the light of this technology, we can actually carve out part of the company, which is a particular project, and allow an access to investor to invest in the project they like. When we marketing the Destiny tokens, we actually want the fan club of the movie, right, or the one who actually not an investor before. So we got a lot of people participating in our tokens who never been investing in any instrument before. They're not a bond investor, they're not an equity investor, but they are a fan of this movie. And they think that instead of they just buying a movie ticket to enjoy the movie, they can actually chip in to support the movie and they earn return. And if the movie is successful, they can contribute to that success being part of their token holder. So it's a kind of a win-win situation, and the investor themselves also happy. They participate in the project. They got a lot of exclusive right to the project. And once the project is successful, they get the return. They get the interest back. So I think is create a very unique value proposition in the market that we can actually deliver a unique investment vehicle for investor. And we aim to do more concept like this with different asset class. It can be different industry. We do talk to issuer across industry. They have a lot of interesting idea that you will never find in the bond or equity space before. Like they want to do some like time sharing of their luxury tools or any asset that is a bit more exclusive, and you couldn't really have a way to participate without this kind of channel. So we believe that it create a lot of opportunity and make us working in finance be much more creative to think what else we can do with this technology.
Yeah, I think that's a great segue, because I think a lot of us who work in Web3 or tokens or otherwise are actually looking for new ways to create things, to innovate. So I think that's a good segue into our last question, which is actually different jurisdictions have different framework for retail and institutions participation. So for example, Hong Kong ban retail. Now they are, relooking at, do they want to create a framework? I'm sure Malaysia, in Thailand, I think, there are different sort of framework for both segment of clients. So do any of the panelists or, all of you, each of you can give some comment on, what do you think the current environment will facilitate, or, which segment do you think actually participation will be in the future? Because I think we started off with a period with more retail participation, and I'm probably generalizing it. And then now we're seeing a bit more institutional adoption, but it kind of depends on the market, and also categorizing of tokens, how you can facilitate each segment. So any comments on that?
Go ahead.
Yeah, Henry, you can go first.
Ladies first.
Okay.
It's International Women's Day, ladies first.
So I'll take that privilege then. For Thailand, right? Actually, Thailand has a quite interesting regulation to start with. With the investment token that Kubix does, we allow to offer to public offering process. We actually have some risk limit, whereby each investor or retail investor, they can invest up to 300,000 baht per project. That's how the regulator help to limit the risk exposure per project for retail investor. But that's already a very good start that we are allowed to open up this investment token to retail investor. And Thailand is one interesting country that retail market is quite active. Even in the crypto market space or even the equity space, retail investor is quite keen and excited to learn about new instruments. So I think the retail market is, kind of like a ball running in this digital asset space to come in, to be an early adopter and to try on this new technology. Having said that, on the other hand, right, the institutional investor is actually still just start. Even though the regulation do allow institutional investor to invest in digital assets since the beginning of this regulations, but given that the challenge around how you keeping the asset, how you keep your tokens safe, and what infrastructure that the institutional will have to satisfy their internal control restriction, etc. It has still been very early stage. And plus that before the digital asset is not under the security law, and a lot of financial institutions, the buy side, they have the investment restriction that they have to, can only invest in certain type of securities. They haven't changed that investment restriction as yet. But now we see the trend that more and more of institutional investors start to incorporate this digital asset into their consideration. And given the upcoming trend in Thailand that they will move investment token under the security law, that should open up more institutional investor to come into this space and treat them as alternative investment, or give them quite diversified risk return profile to their existing portfolio. So we believe that gradually the institutional investor will jump in Thailand and help to bring a big cash flow and big investment into this space.
Yes, and just to add, Kun Apinya, on that point from Thai law perspective, I totally agree with Kun Apinya's comment earlier. And in addition to that, I think if we've looked at the news in the past few years, we see that there is a strong demand from the corporate side as well, institutions who want to set their foot into the digital asset, both by doing their own project, being an issuer, or actually investing in digital assets, be it cryptocurrencies or digital tokens. But there are more things for them to do as an institution when compared to like retail investor. Some of them are like listed companies, and some of them have invested in digital assets one way or another already. But I think as a listed company, they do have certain obligations to make sure, especially in terms of risk management framework and fiduciary duty by the directors. And in the past, one of the I would say some issues that they'll need to overcome is actually how would they, in terms of the accounting principles as well as tax implications, it has not been made clear in the past, especially in terms of cryptocurrencies and digital tokens. I think luckily last year, the Revenue Department has made things clearer in terms of tax implications as to what are the tax implications for investors or anyone who's involved in the digital asset industry one way or another. And most recently, just yesterday, as I mentioned earlier, now if the the institutions want to buy investment tokens, for example, they would have peace of mind that they would not be charged VAT on top when they want to on sale the tokens that they buy to someone else. So I think that could help change the way institutions look at this as well. But your Kun Apinya's point regarding the regulatory framework that might be applicable to some types of specific institutional investors, that I think in terms of regulations, as Kun Apinya said, that in the future, when investment tokens have been changed to be considered as securities, they would be able to enjoy that. Or alternatively, if certain types of institutional investors and the regulator of those types of institutional investors starting to see that the element of something like investment tokens rather than cryptocurrencies, something that are like tokenized assets, have certain value of the underlying assets, and they would allow the institutional investors to participate in. They normally have the power to amend the regulations regarding investable assets as well. So that's another approach that we might see in the near future before the tokens have been moved to be regulated under securities law.
Okay. In the interest of time, I will let Su-Yen maybe to do a quick wrap, and then we can open it up for questions, because I know actually I saw a few people had to drop off. I saw some messages. So Su-Yen, pass it on to you.
Yeah, thank you. Thank you for the the panelists and their insights. I guess to quickly wrap up so that we can move on to responding some of the questions, is that in my mind, I'm thinking about it in 3 buckets. I think we've touched on many various areas, and we would like to kind of leave with all of you, number 1, a major consideration for tokenization to really take flight is obviously the market appetite and the investor appetite for such class of assets. And I think the regulator's response to this clearly indicates there is optimism on the rise on tokenized assets. I mean, you can see examples now, like what Henry had shared and what Kun Apinya has shared. So let's not forget that, regulators respond to the market. And if we hark back on the days of Libra and the Libra Association, started off by Facebook, and now voila, you see a lot of talk about CBDCs and stablecoins. So the day will come when tokenization will take off. But also, I'm very thankful that Henry had also brought up a very important point, which is really around market infrastructure and how we support the development of tokenization. It's great to think about the ideals of what tokenization can do, but we cannot forget that there are legacy systems, portability of data, and interoperability of systems is not something you switch a system off and then a new system comes on, because there is consideration about operational stability and also what do the incumbents do. I can just imagine, like what Henry rightly pointed out, even though bond markets are inefficient, there is perhaps, I might say, perhaps some of these issuers like that inefficiency. They have got welded into that efficiency. So the ability for market infrastructure to meet the demands at the same time when incumbents are so tightly knitted into our overall structure will be a very interesting space to watch out for, especially in the area of tokenization and really what it means in Asia. Because as we think about a lot of countries in Asia, a lot of them can leapfrog in manners that perhaps more developed economies can't easily do. So I'll leave that little bit to you to think about when it comes to market innovation and market infrastructure. And lastly, I was very glad that Kun Pinya and Kun Kularat had mentioned about innovation and what new asset classes can be discovered through tokenization. Touching on durian plantations, which is close and dear to my stomach, is very important. But just imagine, the new ways of helping farmers finance the new growth and being more ESG compliant, and also working not only in agriculture, but think about the ability to reach out to new investors, which may not be traditionally able to partake in the current traditional financial world. And I can go into many examples where ACA is even talking to Conservancy International as they think about how they're creating the new financing infrastructure for some of their projects. So innovation and the ability to bring new participants into the economy for bigger and greater economic value add, I think is another area that I would like to leave with all of you. And finally, I would like to thank all the panelists for sharing their insights. And now I would like to pass the floor back on to Vivian so that she can again answer some of the questions that our audience has posed. Thank you, Vivian.
Sure. I think one of them actually, he's from Kaiko. I think he had to jump off. So maybe we'll leave his question. I can read it out, and to be honest, I can answer it, even he's not here. I think he's asking actually about, whether we think that regulator can regulate technology, which I think the answer is quite obvious. Basically the question is panel's view on whether regulators will allow participants to use blockchain technology to achieve compliance. I wouldn't say definitely not, but regulators I think have come on and out, said over and over again, same product, same risk, same rules. So it's not about the technology, it's about what, the operators are marketing and selling, and do they have the same risk? If they do, then they impose the same rules. So I think that really is the response. If there's anyone else in Kaiko that actually is on the call. And then we have a separate question, I think, which is an early question. So one other participant asked, what's the impetus for traditional finance players to enter the digital space, specifically tokenization? Why would they embrace when they can block? That's any panelists that have a view on that?
Ladies first.
Maybe I'll let you take first.
Oh, okay. Well, I was just going to say, whenever a new technology wave comes along, it's always easy to be scared if you're the incumbent. The whole point is that new technology is threatening to disrupt your business. Now, I've always been fascinated why it is that incumbents can't always adapt to new technology, right? In theory, they have every benefit. They've got the capital, the clients, but when you are wedded to a business model, as Suyan said, it's sometimes very hard to change. And to me, it's quite informative to look at what I think of as the last big tech shift in finance, which was electronic trading. And when we moved from kind of the open outcry pit trading with hand signals to electronic trading, it's the exact same activity. in theory, all the same brokers who were the biggest brokers in the world under the old world should have been able to migrate to using electronic trading, but they just didn't for some reason. And if you look back on the list of the world's biggest brokers in the 90s, nobody even recognizes any of these names anymore, except for Lehman Brothers, and well, they're gone as well. So like it or not, new tech comes. And if the tech does its job, it makes markets cheaper, quicker, faster, more efficient. So at some point, it's inevitable. The question becomes, which are the financial institutions who are willing to adopt technology early enough when it's still not quite mainstream, when even sometimes the technology isn't as good as the previous generation, knowing that if they start building today, they can win in tomorrow's world.
Yeah, I have very similar view to Henry that I used to work in the traditional finance as well. Over the past 15 years, there's a lot of change in the traditional finance as well, but they haven't had any big flip in the past, right? We think about, we have like financial engineering, we try to do structured product, we try to do like swap, we try to do many things to structure, but we haven't had any big change or reimagine how investment instruments should be. And given that now we have been ring-fence the financial world in the financial world, we never try to connect it back to other aspects of life. Like for Kubix, right, we try to enable the concept of investment and experience together, because we believe investment shouldn't be just about, you know, investment instrument. It should relate to other aspects of the business as well. Like people who can do do business can earn the investment from their investor, but they can also give back something else that is not just a financial return. They can give the utility benefit as well. So this is kind of like you can reimagine the whole space with the technology. So if why? So my question is like, why not, right? Because the industry haven't seen a big change for such a long time, and this is maybe the end answer might not be blockchain. It might be a different technology, but we do need some change, and we need to create a better investment instrument in the future and bring in whatever technology that will fuel this growth in the financial industry. So I a strong believer that, you know, we do need change. And how we can change is up to us to use the technology to fuel that growth. Yeah.
Okay, I think that's a great answer. And anyone else actually in the audience actually who have additional questions? So I think those were the two that we saw.
Right. I think I'm just going back to the first question that you mentioned, Vivian, because I'm also an ML lawyer, and I think that point they raised quite a good point. And basically, when it comes to ML CFT laws, the reporting entities would be required to, you know, as everyone knows, to conduct know your customer due diligence requirements. But with the technology, there are new ways to do it. Most of the participants in Thailand still do it traditionally, but also started to use like some electronic method to do it, to do KYC, CDD. For the zero knowledge proof, KP identity chain in particular, we haven't seen it you know, put in use in Thailand just yet. But as you mentioned, Vivian, that normally in financial regulations, it's like same risk, same rules, and ML is the law that is usually risk-based. So if any technology can be used to achieve the same risk management, generally that should be okay. Of course, we need to think about the details as to how it's done to make sure that it complies with the law. That's one thing, right? And a good example that I would make is the Thailand network called National Digital ID, which also leverages blockchain to provide network of, you know, the platform that can share the confirmation of authentication verification by, you know, among the identity providers and the relying parties. And it is something that many reporting entities started to use already. So it's a new technology using blockchain, and as long as it can reach the same level of risk management, it is permissible usually.
Okay, great. That's a bit like the digital identity, I think, which everybody is trying to develop, that they hope actually can connect. And I would love it actually once you KYC, once you don't have to KYC again, I think that would be great. And then you can passport through. I think that would be the dream. So I think we have time probably for one last question. Saw that actually, Suyan posted that this was from the audience. Other than regulation and trust, is there any major factor that you see is a major hurdle or challenge for adoption?
I think the biggest, to me, I think of regulation and trust as ground rules. You obviously need it to be able to operate, but in and of itself, it's not enough. What we need are compelling products. And that's why I think as we shift from looking at a lot of cryptocurrencies to asset tokenization, if people can get access to products they just couldn't get access to before, if someone says, you know what, instead of me putting my money into a fixed deposit at my bank, I can buy that same bank's bonds and get a higher interest rate, why wouldn't I do it? And as long as the infrastructure is easy enough to use, as long as I think it's safe, right? There are rules in place, so I'm not going to get bilked and lose all of my money. Why wouldn't you do it? So I actually think the biggest thing that we need now is quality product.
I think that's a very good point. Anyone else? Anyone else have other questions? Seems like not. So Suyan, do you want to wrap? Do you want to give a wrap?
I think the wrap, I would like to say, I think what I had wanted to say, I had said before, the 3 points. I guess what's important is that as we move ahead with the whole idea of tokenization and see where the space moves, I hope the members of the audience who attended today do not hesitate to reach out to us. If we have any ability to answer your questions, please reach out.